All right, so we've got this global market update from my pensions advisors.
Mm-hmm.
And honestly, it's a bit of a head-scratcher.
Yeah.
Asian markets are up, U.S. markets, well, they did their usual thing after, little Trump tariff tremor.
Yeah.
And the U.K. is, well, it's kind of a mixed bag.
Right.
So let's
unpack it.
let's dive into this and see what we can actually learn from this,
I think,
seemingly simple.
yeah, they seem like just, quick headlines, but
Blank.
there's always a lot more under the surface.
There's a story there.
Yeah.
So let's start with Asia.
Mm.
The report highlights China in particular, with some, strong factory activity.
Right.
But, instead of just saying, oh, great, good for them,
Yeah.
what does this really mean? What does this actually tell us? Like, what sectors are we talking about here? And how does that impact the global landscape?
So it's not just a general upswing in factory activity. We're seeing a surge in China's technology manufacturing, particularly in things like semiconductors and renewable energy components,
Interesting.
which really points to a more, I think, strategic shift in their economy.
Right.
They're focusing on high-value exports that have a lot of global demand. And I think it's important to remember that, the world is increasingly reliant on these very specific technologies.
Oh, absolutely.
And China is very actively positioning itself as, the primary supplier.
So this is a big deal.
Yeah.
And not just obviously for China, but for anyone who's,
Absolutely.
involved in those sectors globally.
If you're invested in tech or in green energy,
Yeah.
what happens in China is going to have a ripple effect on your portfolio.
100%. And I wonder, too, about, how this Chinese kind of,
This boom.
this boom
Yeah.
might impact the UK.
Right.
Especially now, post-Brexit.
Especially post-Brexit, because they are very actively looking for new trade partnerships.
Mm-hmm.
And, there's a lot of potential there. But then, of course, you've got the U.S. and the tariffs, and that might complicate things.
Well, that's a perfect segue because speaking of the U.S., it seems like every time President Trump, tweets about tariffs,
Yeah.
the market just throws a tantrum.
The market freaks out.
Yeah, and this report shows, an initial dip and then a rally.
Right.
But I guess my question is this just, this kind of knee-jerk reaction? Or are there sort of deeper anxieties at play?
Well, I think it's a little more nuanced than just like a Twitter-induced panic.
Right.
I think there's actually kind of a division among investors right now. You've got your institutional investors.
Yeah.
They're taking the long view. They're betting on the U.S. economy's resilience.
They've seen it all before.
Yeah, exactly. They see tariffs as a temporary hurdle to overcome.
Uh-huh.
But then you have your individual investors, and, they're often driven by emotion.
Sure.
They're quicker to react to any perceived threat.
Makes sense.
And I think that explains the initial sell-off.
Right. So that rebound then suggests that cooler heads prevailed.
I think so.
Or at least, the bigger wallets.
Or the bigger wallets, yeah.
Yeah.
But, historically speaking, these kind of tariff situations haven't completely derailed the U.S. economy.
Right.
They cause disruption for sure, but they often lead to renegotiations, new trade agreements,
Right.
which can actually benefit certain sectors.
Yeah. There's always winners and losers.
Always. Yeah.
Okay, so let's bring it back to the UK then.
Okay.
Because they're kind of caught between this, this booming Chinese market
Yeah.
and this, volatile U.S. landscape.
Right.
And the report does mention these, potential U.S. trade deals as a positive thing.
Yeah.
But what does that actually look like in practice for the UK post-Brexit?
Well, the UK is actively pursuing a number of trade deals, particularly with the U.S.,
Yeah.
to kind of bolster its economy now that it's outside of the EU. One key area of focus is digital trade, which is a sector where both countries have, considerable expertise.
They do.
However, there are some sticking points,
A lot about.
particularly when it comes to things like agricultural imports
Right.
and, the alignment with U.S. regulations.
Oh, yeah. That's always a tricky one.
It can be very complicated.
So essentially you're saying there is opportunity there.
There is definitely opportunity.
It's this complex negotiation.
It is. It's a very delicate dance.
And the devil's in the details.
Absolutely. I think the outcome really depends on striking a balance that benefits both economies without significantly disrupting, existing trade flows or creating new barriers.
Right. You don't want to fix one thing and break another.
Exactly.
All right. So to kind of wrap all this up,
Yeah.
China is making these, strategic moves in tech manufacturing.
Hmm.
with, global implications.
Global implications, yeah.
The U.S. market is, well, it's a bit of a psychological battleground.
Yeah, a little bit.
But long term, it seems like things are relatively stable.
I think so, yeah.
And then you have the UK kind of walking this tightrope, seeking to leverage opportunities while also navigating these, incredibly complex trade negotiations.
Right. It's like a global economic chess match.
It really is.
Every move influences every other move.
And that brings us to, I think, the big question that we need to think about going forward. And that's how all of this might impact emerging markets.
Yeah.
Especially in places like Africa and Southeast Asia, who are increasingly tied into these global supply chains.
Absolutely.
Yeah.
It's a truly interconnected world.
It is.
Yeah.
That's definitely something to keep in mind, as this whole economic drama unfolds.
Definitely.
Well, thanks for joining me for this deep dive.
My pleasure.
It was a fascinating conversation.
Always is.
And to all of our listeners out there, thanks for listening.
Thanks for tuning in.
And we'll catch you on the next one.
See you next time.